Hey everybody, Economic Ninja here. I hope you're doing great. I want to talk about real estate today and cash out refis that are hitting the market pretty hard right now. And I'm going to just talk a little bit about the article. We're going to pin it below and then give some thoughts. It says cash out mortgage refinance demand booms 33% in the past year. And this is from Black Knight. Remember, Black Knight is a mortgage analytics firm. They cover all kinds of things when it comes to mortgages in the real estate market. It says homeowners are utilizing record high home values to take advantage of cash out refinances, according to Black Knight. It says right here that the cash out mortgage refinance demand has risen 33% over the past year, driven by 32% rise in tappable equity. That's huge. The report showed that despite the fact that mortgage rates have been rising slightly over the past few months. Now, there's a quote from them. It says this shift tends to happen on any rising rate environment, never mind one in which American mortgage holders have more than $9 trillion in tappable equity available to them. And this comes from the Black Knight's president, Scott Happ. Now, usually when rates start to rise and there is a consensus amongst homeowners and investors, they tend to, if they believe that home rates are going to start rising in the near term and start going up and up and up, they run to their mortgage lender and they say, hey, let me go ahead and get a new loan. Let me either refinance my house or let's tap into these equity lines. Now, this is what's really exciting to me because it's actually going to be bad for a lot of people, but it's exciting to real estate investors and people that are getting ready for this next market downturn. And that is, people are not taking that money and usually spending it wisely, especially in this environment right now where we have the economy still on absolute life support. It's only on life support because of government money that's being spent to keep it going that much. You know, we still have huge unemployment issues right now where people have decided to walk away from their current jobs and either seek employment elsewhere or they're still getting government subsidies. And so some of them are tapping into the equity of their homes. Now, the forbearance issue is still absolutely massive. People aren't paying attention to it because it's being underreported in the news. But right now, there are thousands and thousands of people that are right now trying to get their banks to work with them in a forbearance situation. But I believe it's going to end badly. The reason why is because most of the time, these forbearance issues are being settled with 40-year mortgages with a higher interest rate, around 5%. And that's only going to save the consumer about $100 a month. That's what I've been finding from some attorneys that I've been speaking with. Now, going back to the issue with the equity. Remember, people are using this now not only to live on, but they're buying things that are just going up and up and up in prices. Most homeowners are not investors. Most homeowners have their largest asset being their personal residence. And so what happens is they usually spend carelessly. Now, we saw this in the recent past in 2003 to 2006. But towards the end, where 2006 was happening, people were having to borrow against their home to keep their level of lifestyle. And that's the dangerous part. You see, people usually cannot see larger trends. They see the shorter trends and they act on those. And so they don't see the big picture that, like today, the entire global economy is completely imploding, completely collapsing right now. The big people are getting out. They're moving to cash or cash equivalents, good, solid, stable investments, whereas the common, everyday human being right now really does not have an idea of what's going on. And you know that's true when you see the search results on Google of who's searching for what. And when your favorite sports team is still trending and not economics, then you know that the general public is absolutely unaware of what's going on. So in my opinion, and again, not financial advice, I'm not a financial guy, I'm just an investor, that we're still on the path to a real estate correction, especially now that central banks around the world are starting to tighten the amount of money that goes out to both the economy and the general population, but also they're going to be raising rates. And in a raising rate environment, every time rates go up, that's less and less money that you can afford to borrow because the amount of monthly servicing on those debts, the cost of the mortgage that you're going to be pulling out. All right, guys, with that being said, I hope you got something out of this. I'm going to link the story below. The Economic Ninja is out.